This is a stock analysis blitz for Barrick Gold. Barrick Gold are listed on the Toronto Stock Exchange as ABX.TO, the secondary listing on the New York Stock Exchange as with the ticker symbol GOLD. Before I start this video, please remember I do these just for fun as a hobby and always speak to a qualified financial advisor before making any investment decision. So all of this analysis is going to be centered on their gold assets, but they also do have 8% of their revenue coming from copper. And actually they are focusing a bit more on copper in their portfolio development with their Reko Diq mine in Pakistan, which should start in 2028. If that happens, it will be a top 10 copper mine in the world. So this gives them a bit of extra spice as well. Now, what I found when I looked at some of the other gold seniors was a lot of them were having to do lots of stock dilution and taking on debt in order to maintain their future resources. However, in the case of Barrick Gold, they tend to focus more on their own exploration. And so this puts them actually in a much stronger position than certainly Agnico Eagle Gold, who I looked at in my last video. However, when I look at Barrick Gold, we see that they've not had to issue new shares to raise money. And their debt is at 5 billion, but that could easily be covered by their cash they have on hand. So I think that they are I think they look much more solid than Agnico Eagle. What's interesting though is that if you compare their share price with that of Agnico Eagle, there's not that much difference, and this is a theme I've seen again and again the more I look at stocks, is that actually what seems to influence share price more than anything is actually what sector the stock is in, rather than how good that stock is versus its peers. But if given the choice, I'd certainly choose Barrick Gold over Agnico Eagle. I did a video just on the price of gold a couple of videos ago, and here I discussed this epic cup and handle formation which we've bullishly broken north of. And what's interesting though is a lot of commentators are saying that the gold miners are actually quite undervalued, relatively speaking, versus the gold price. But actually I think that's only, and although they are generally, I think they're overstating that, because it depends on when you measure from. If you measure from the exuberant market bubble of 2020, then yes, the share price of Barrick Gold here has gone down a lot since then versus the price of gold itself. However, if you go back to a more sensible time frame, missing out this speculative bubble, you see that it's not as pronounced as a lot of people are making out, but it is still favourable. I mean, we see a 10% gain here of the gold price versus only a 30% gain for the Barrick Gold stock price. So unlike a lot of their peers who only want to get involved in squeaky clean territories, Barrick Gold go all over the world, with only 31% of their gold reserves being in North America. And you can see here where their reserves are located around the world, and it's pretty much everywhere. Of particular interest is their Reko Diq mine in Pakistan, which will be the top 10 copper mine once it starts. And also they have a mine in Papua New Guinea, which they're having all kinds of trouble to just get it going, but if they were to get that going, it'd be quite significant. But you do have the story here that although yes, they are doing their own exploration and they've managed to kind of organically acquire all these resources all around the world, there's a lot more risk with their portfolio than with a lot of the other gold seniors. But then it seems to be paying off judging from looking at their balance sheets. I've got here their market cap, and you can see that the net assets are a match to that, giving them like a 1-to-1 price to book ratio. So that makes them look nicely priced. Plus then you've got to think of their reserves, which tower above a bit at 44 billion. They really do look nicely priced, providing that the gold price stays where it is. So looking at some news items over the last 5 years, and the most significant ones I could find was in 2021, they achieved a framework agreement with the Papua New Guinean government for their Pagora project, in which they have 49% of. So there's still lots of administrative roadblocks here, and obviously Papua New Guinea, a very dodgy place to do business, and you know, so this fits there. They've achieved some progress there, but you've got to accept there's a high risk factor. And the same really in Pakistan. Now they've got a reconstituted deal for their project in Pakistan, but again, lots of things not being as they seemed when they initially got involved. But still, there is progression, and if it goes ahead, it could be a bit of a boost to this company. And then finally, they've been doing 1 billion of share buybacks from February 2024. And actually, having gone through their annual reports, they are very big on shareholder return. There's good shareholder return, but actually, in the case of this company, off solid books. So going through the numbers, and actually, the revenues are fairly steady. And what complicates things, I've noticed, is the impairment gains, such as here, and impairment charges, for example, in 2022 of 1.7 billion, which was related to their Lulo Gunkoto project. So because of the high risk of their diverse portfolio, this does mean you get these massive swings of impairment gains or impairment charges, and that really does muddy the waters a bit in terms of their net income, which tends to kind of fly all over the place. But if you was to cancel out this impairment gain and this impairment loss here, then that would actually bring down the net income here and bring it up by 1.6 billion here. And you see that actually their net income is kind of, I don't think stable is the right word, but it's on a trend. It's not as bad as it kind of looks here, without all the fuzziness coming from the impairment losses and gains. So you kind of have to live with that. But my impression is that it is they've got good money coming in for the long term, with good future resources, and it's not in any way a perfect profile how I like, but taking into account the fuzziness caused by the impairment charges, it's actually an okay situation, and there is plenty of free cash flow coming in to return to shareholders. And their assets, and when I looked at Agnico Eagle, there's all kinds of anomalies going off here as they desperately went through massive reverse takeovers and stock dilutions and things, took on debt. In contrast, Barrick Gold look really good because they've got a nice stable asset profile here, because they're not having to take on debt and they're not having to do massive stock dilutions to acquire assets. And so we have a much more sustainable and much more solid set of books here. It is very impressive that the cash they have on hand could just about cover their long-term debts. So here I've got my graphic I like to use for all companies I look at, and you see much more favourable than Agnico Eagle actually. If you go and look at the last video I did, I mean the market cap looking only cheaper here, as it's now dwarfed by their net assets, and their debt is relatively small, and the price to earnings ratio of 16 is fairly nice. So that completes my video for Barrick Gold. I hope you found it useful. Myself, I'm only really looking at them because they're the main component of a gold miner fund that I'm looking at. But if I was buying Canadian stocks, they definitely look better than Agnico Eagle, and they look really solid. You've got to accept it's with any of these gold stocks, you're taking a bet on the price of gold staying where it is or going up. But that aside, they look really solid. I hope you found this video useful, and good luck with your own investments.
I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.